So I think it's good to start. So welcome everyone. My name is Igor Tomych. Let me say hi. I'm glad that you found the time to join today. Also, this webinar will be available in recording. And today I'm going to talk about card issuing. I'm going to show the slides, explain certain things which are usual for the card issuing and card processing processes. And then I will do a short demo how Stripe issuing works and certain things how we implement it in Fintech or in our own product for which contains the model for card issuing and card processing. So let me start. I will switch off the video and then we can start through the slides. So just a sec. So my name is Igor Tomych, and I'm CEO of Dash Devs. I'm also founder of the new project, which is called Fintech Garden. That's a media project that we are starting in UK market. It's pretty new, and I'm doing the webinars in this scope. We are starting the media project, which is going to describe different functionalities and different processes and fintechs. We're going to cover a lot of topics. And what I found missing basically anywhere internet, one place where you can teach and learn yourself how the financial institutions or the fintechs are working and how different processes or business processes there should be structured. I have around 15 years of experience, and I wrote the really first application in '98. I was fortunate enough to start in quite young age, and I'm working in software engineering from 2004. We've done quite a lot of as a company in fintech space. We launched products in the United States, in United Kingdom. We worked with the several companies in MENA region, and we see that sometimes the issues or the problems that you need to solve in fintechs, they quite similar. That's why we built our own product, which is called Fintech Core. And we can help other companies with the things that we already done or potential things that will come in the market in future, because we know how to deal with the complex solutions. And let's go into I'm going to explain the difference and what are the card networks, what are the different card types today, usual transaction scheme, how it works, what is the card issuing, what is the card processing, and I will give a little bit dive deep into the authorization and processing processes. And then what are the balances with the cards? And sometimes this question is where this problem is resolved with a virtual ledger system, and we'll cover security and compliance, infrastructure, and challenges in projects which are integrated with the card networks and real-time processing. I will show two cases. One is Stripe issuing. That's a product that is available in Stripe. It covers most of the logic if you're doing even direct integration with a VisaNet or MasterCard. And then I will show a short video how our Fintech Core project works. So just a sec before jumping.
Hey guys, I'm Julian.
So let's start. Let's talk about the card networks. So basically, the card products are the products that are tailored and function inside of the card networks. Here, I've listed 5 major networks, but in reality, they're quite bigger number, and worldwide, there are quite a lot of card networks, which sometimes are local. But let's say for the simplicity that there are 5 major networks that you usually will see in any country functioning. It's American Express, that's a MasterCard, that's Visa, Union Pay, and Discover. Today, I will talk in general, and all the things are quite applicable to all 5 networks. There are technically differences there in implementation and compliance, but overall, if we're talking about the physical cards or virtual cards, the process is quite similar. And if we go hello. So nowadays, there are three main types of the card: debit cards, credit cards, and virtual cards. There are a bigger number of cards, and you can split by technology, or you can differentiate by the technology. But today, I will cover the process which is not in difference in debit cards and credit cards, because what we're going to talk is the general flow for the card processing and card issuing. And the difference between debit and credit on technical side is that in debit cards, you're actually using the funds that are sitting on client's account. And if we're talking about the credit, it's a credit line provided by institution, and usually it's not limited to any numbers. And basically, you're not using the money that you have on your accounts. You are generating, you can say, the loan, and then it's covered. But from technical side, process is quite the same. And those two types of the cards, they usually physical, and nowadays we see quite a lot of usage of virtual cards. Sometimes neobanks, they even proposing or giving the products to the market, which are given an ability to create the card, virtual card, use it and dispose it, and that adds extra layer of security and confidence in your product, because if the card itself is exposed to third parties, then you're disposing, and in this case, no security issues or overusing the funds. So there are types of the networks and types of the cards, and that's how the local or how the card transaction usually looks like. You have a customer and you have certain page which is secure hosted, and the customer is providing the card to this particular page. And the second step, that this information got into the payment gateway. Usually it's integrated with the merchant account on of the someone who is trading through the page. And then if you would like to do the transaction itself, you're going to the network, which is doing the interchange if the currencies are different. And as a step 5, the card issuer is involved. The card pawn itself contains the type of the network, which we discussed previously, and by the BIN number inside of the your card, there is a special information which is giving an ability for the network to find the card issuer. So basically, to start the transaction, the merchant or the payment gateway have to extract the information about your card, find out which network to use, and then go to the network and talk to your card issuer to find out what is the card processor. And after that, it will go back to the network, it will go to your merchant portal, and will process the transaction with the customer bank, and money will flow to the merchant account. The payment gateway will have this notification, and then this notification will be shown to the website, and then the customer understands that the card has been used. That's quite simple way to see the transaction. It just gives the sequence of the events that are happening when you are using the card online on the page. And in this process, one important point is card issuing, because before your customer is getting the active card, let's say the physical one, certain things should be happening, because regulator or card issuers, they require you certain process to be done. And this process is called KYC, or know your customer. And for that, you need to collect documents of your customer, verify their identity, verify this particular person is applicable to your region or to the license, and you're able to basically step 1, collecting documents. Step 2, do the KYC verification. Usually there are two ways how to do that. You can verify with a compliance officer who has an access to your back office, extract this information, and checks the documents and give an approval or decline for creating an account. But nowadays, most of the digital banks or neobanks, they're using KYC vendors for that. In real time, they do an APIs request for the documents checks, and then documents are verified. And if everything is okay, then you're creating the card holder. And that's before even starting creating the card, because if we're talking about the physical cards, the cards somewhere should be printed and then packaged into the leaflet and delivered to your address during the registration, which is picked up by your system. And what is more importantly, that usually the card which is dispatched for the delivery, it's not activated card. So before using the card, you need to get it into your hands, go into application and activate. And that's a special process because the card can be lost or somehow can be acquired by the third parties. And if you're activating the card, they might potentially use it and use your funds. So sometimes activating the card itself is a verification process of your address, because when the card is delivered and you have an ability to pick up and put certain information which is on card, which is full pen, 16 numbers written on the card, or the CVC code, which is on the back of the card, and you're activating the card yourself, it means that the card is delivered, you have an access to the address specified during the KYC process or registration process. So card issuing, it's a process when you are creating the cards and delivering to the customer. The same applies to the virtual cards. It's a little bit different because in this case, the card itself is not delivered. Usually the virtual cards, they activate it from the scratch, but as I will show in Stripe, you can alter this setting and you can actually create a card which is not activated, and then the customer can activate themselves. So that's card issuing. And the next process, which is usually happening when you're using the card as a customer, or your customers are using, if you're issuing or if you're providing the card functionality customer, is a card processing. And here, the most important things that the customer is going to a certain shop and trying to use the card at point of sale. It means that it's real-time requests happening, and that's maybe the first input which makes the product or implementation of the card processing so hard that you need to deal in real time with the request. You cannot say, okay, you can go for the checks for the card balance and for the card processing on special time, because the customer decides when he wants to use, and sometimes it's not even linear, and I will explain why. So first thing, real-time request. The POC is requesting by finding the card issuer, he's asking our tech if we have enough money, or basically, can you authorize the request for using the card? And in this case, this step, the balance verification happens. That's a step one. This process can be handled two ways, but let's say it's handled on our side. Somehow we're verifying that the balance is sufficient with the customer, and then we're granting the authorization. So that's a step three. And then after a certain period, that transaction settlement can happen. It might be happening right after the authorization, or it might happen with the different time frames. For instance, if you're using the card, let's say in London Underground, usually the settlements of the transaction, they're happening overnight, or they even happening on Monday nights, the nights between Sunday and Monday, and closing the weekly statement, because depending on how many transactions and how many turns or how many usage of the underground you've done, the final pricing will be different. So the processing is different from issuing, because issuing is just creating the card, printing, delivering to you, activating, but usage is a different process, which is called card processing. And let's go back a little bit to other authorization. So let's see how it works. The card can be used in different ways. Usually the card itself contains the chip and pin. The cards used to have the magnet stripes, which are nowadays not there anymore. And then they have the contactless ability. And you can do this on the merchant terminal, which is point of sale. It's usually authorized and pre-protected devices with a connection to the network, which are provided by the banks or other fintechs to the merchants. And step two, the information is transmitted from the merchant to the card processor. And the card processor sends the transaction data to the card holder's bank, and then the card holder banks send the authorization or decline. And it's real time. And the second thing which makes this process hard is that you need actually to reply in real time with a quite small fraction of time. If we're talking about usual settings for the reply, you need to reply with the 200 milliseconds response, which means those requests should be processed quite fast. Today, I will show how the Stripe is doing that. The requirements a little bit weaker. You can do the reply in 2 seconds, but there is a time frame in which you need to say, are you authorizing or you are not authorizing this particular transaction, which means you need to understand what is the balance of the customer and make this decision. That makes a software much more complicated than a usual software because we have certain complexity that we need to deal with. And in cards, there are usually 2 steps, the authorization, and the second one is the settlement. And usually it happens once in a day per merchant. It sends all the transaction to the processor, which I can maybe rephrase a little bit other way. So when we are doing the authorization, we're asking, can I use the customer card and grant me an access to deduct certain amount of money? And the card processor is saying, yes, I'm granting you this ability, but the real closing of the transaction, meaning that, okay, now you are start to move those money, is actually happening on the settlement. And the process of settlement is pretty complicated. If you have an experience working with the Stripe Intents, for instance, or any acquiring functionality when you are processing clients' cards, you know that the process between authorizing to deduct certain amount from the client's card till your merchant account is hit with money, it's quite long. So if we're talking about the Stripe, then it takes 7 business days to get your money. You need to imagine that there is 2 different flows, one with the balances, it means the numbers, and then the cash flow, the actual money which are moving. And cash flow and money are much slower than those balances. So you understand how much the acquiring is going to bring you in certain amount of time, and that's a balance, but the cash will be moved with a much slower pace. So that's what is happening with the settlement. In this case, the approved transactions are taken to the sponsor bank, and sponsor bank deposits funds on the merchant account, and then the sponsor bank collects the money from the cardholder bank. So basically, the settlement is happening here. And we talked about the balances. And if you are doing the integration with or implementing card products in your fintech or digital bank, usually there are 2 ways how you're dealing with the balances. One way is actually self-hosted or externally hosted balances. Today, we will take a look in Stripe, which is giving you self-hosted balances. And there are products out there, Galileo or Global Processing, which is popular in UK, quite famous in the UK. They giving you an ability to host balances when themselves. What it means for you? It means that the product, card product balance should be sitting as a separate item, which means you cannot combine the account balance with your card balance, because if someone is keeping a checking account and you would like to issue the card, and the checking account will be powered by the third-party banking rails, which doesn't provide the card issuing functionality, you need to implement with the 2 different vendors. and you will need to work with the balances somehow if they externally hosted. So it's extra complexity in terms of managing the product, but it gives some technical advantages. And vice versa. If you are implementing self-hosted balances of your card, it's more technically capacity from your team because you need to build the soft, which is meeting certain requirements, but you are more you have more freedom to implement your product. And why balances is so hard to implement? The first thing is scalable architecture, because if we talking about the digital banks, or if you have quite a lot of customers and all those customers able to issue the cards, the physical and certain number of virtual cards, you need to make sure that if they doing simultaneously the request your system for the authorization, your system should be capable doing so. Because if you're missing the timelines for answering authorizations, your customers will fail with getting approvals. And if we're talking about the fintechs, it's important to give a trust into the system, because people are giving you the money and you're working with the balances. And if I cannot use my money on the card, I will be frustrated. And it means that they will go and they will choose other products. And we would like to make sure that our customers are retained, that they actually happy with the product. It means that our tech should be sufficient for the scalable architecture. But in the same time, when you're making scalable architecture, you need to make the distributed system. And that's another issue, because if you're distributing calculations or computations between servers, which means at some moment you can be out of sync of the balance, because if one server knows that you already deducted the balance for $10, but another server doesn't know and still thinks that the balance is $10 and not $0, they will allow a certain transaction. So on one hand, you need to scale architecture, but another one, you need to know exactly what is the balance precisely in the specific time with the specific quality and timing capabilities or requirements, because POC is asking you in real time for the answers. And another third question is performance optimization, because even if you're meeting scalability, you are meeting distributed system locks, which means all the servers, they know in the same time the exact balance, you should be fast enough to answer all those requests. So usually it's quite hard piece of software, and it requires certain knowledge how the fintech processes should be handled and certain information how the software should be built. So usually if you compare to other online products, it's harder to build and harder to maintain, because there is a pricing for the bugs. If you're calculating something wrong, then you're basically working with the balances, which means money. And there is a specific type of the software which is solving this issue. It's called virtual ledger system. So there are machines which are called a ledger system, which giving an ability to take all those requests, process in real time, and understand the real balances and facilitate the payments or settlements in various financial transactions. Usually, if you're building the card product, at this stage, you should have certain virtual ledger system, which is responsible for calculating the balances of your customer, and then gives you the advantage by easy to integrate new items or new products with the balances into your system. So that gives a virtual balance that represents the obligation or entitlements, and transactions are processed and those balances updated to reflect the changes in each party positions. And this can facilitate real time, which is really important, as we discussed already. So faster settlement time, reduced transaction costs, increased transparency, because you can do with the virtual ledger system, you can do the audits and the logs, and improved risk management, which once again is really important in fintechs. And why card security is important? Because first of all, it affects the license. To work with the cards, there are usually two modes. One is requiring PCI DSS compliance, which I will talk a little bit after. And another one, when you are not dealing with the card exactly, you are working with the special tokens, which are not exposing personal financial information. And PCI DSS compliance, that's a compliance which is covering the way is how your infrastructure and business processes should work to have an ability to store personal financial information. And in this case, if you're storing full card funds, it means that you need to be PCI DSS compliant. In any way, you cannot store those information. And as you understand, the security also affects clients' trust, and it gives issues with the cash flow, because if you're having certain security issues with the calculations or processing, it will affect your real money cash flows and your business in danger. So it's pretty important to think all the solutions and all the tests and implementations through the security angle rather than the cost of the development, because this part is pretty critical, and any issues will bring quite a lot of issues to the business. And going back to the PCI DSS compliance, that's a payment card industry data security standard, which gives the standard and different compliances depending on your volume of transactions. So it's mandatory for the card brands. It was created to control cardholder data and reduce card fraud issues. There are three types: is self-assessment questionnaire, firm-specific internal security accessor, and external qualified security accessor. It really depends on the volume, but make sure that if you're building and you're planning to work with the full PANs of the cards, you need to be compliant with that. And my suggestion is that you should take it into the mind from day one and see how the business processes are working and the infrastructure and the software process to meet those requirements. There are quite a lot of, I will not talk through all of them, but there are quite a lot of things that you need to keep in mind. It's a document policy, the way how you are accessing your infrastructure, how you are encrypting and protecting the data, quite a lot of things. So you can see that. And there is another important topic in card issuing. It's risk management, because that's one of the part of the PCI DSS compliance on the business level. You should have risk management policies. You should have accountable personnel for those policies and running books. But what is usually is important with the cards is, for instance, there is an effect PSD2 initiative in Europe, which defines certain ways how you're handling the card transactions, for instance, second factor authentication. Nowadays, you might see how if you would like to use the card online, there is usually the mobile application or SMS authentication, which is coming to your phone, and that protects your card and gives an ability to more control what's going on with your card and balances. And if somehow the card is leaked, in this case, you will be protected by second factor authentication. Usually, it also requires certain technology implementation from your side. Sometimes the products, which are not direct integration with networks, they provide in the tools or the approaches how to solve this question. There are also question with the frauds, because cards usually lost, and you need to provide the way for the customer support to decline or to close the cards and reissue new one. In this case, to keep the authorization or keep an ability to transfer the transaction history. So it's pretty complex process, and usually it's not enough focused from the product side. If you're building your own product, you should run all the cases, or at least list them, and then make sure that you're covering in your run books or in your product with those cases, even if you're not implementing from day one. And another thing which is important, anti-money laundering, which is usually required by the regulator. All those transactions should be checked against third-party sources and vendors. When the card is used, you are calling APIs and checking those transactions for IMO. So I will talk about the Fintech core. As a company, we accumulated all the experience in our Fintech space, in our white label product. And it has the balance orchestration and it has the card orchestration modules. And today I will show a short video on how it works. So in this case, you will see a little some presentation, and we developed this white label solution by overviewing the market. And usually the market is split between two possible types. If you're fintech, how you would approach your product development. One way is to have custom development team and develop the product. And in this case, you're in full control over the budgets, over the product itself, but you need to develop, which means takes time and it takes certain budget. The second way is to go to the market and buy white label products. Usually they cloud-based and they make you vendor lock, which means if you have the white label banking solution or even card solution, you're vendor locked to a specific vendor. And by knowing that, we developed the product, which is called Fintech Core. It's a source-based product, which means we're providing you the license for the source codes, and you don't need to be vendor locked because you can update the business process, which is important nowadays, last time to market, but also in control of your business processes. So I think this product fits quite a lot of clients. And we just started with several clients of us already in the production, but we're looking for more implementations and more launches this year. And demo time. So I will show you certain things on Stripe. I don't know how much of you heard about the Stripe issuing. So there is a product which is called Stripe issuing, and that's one of the tool of the Stripe which gives an ability to create physical and virtual cards for your business. In this case, we're not overviewing the licensing and the integration. There are quite a lot of products out there who are using Stripe, and they have local special cases, for instance, with Klarna and Zip. So Stripe is, I would say, one of the modern API issuing solution. And by using the API, you can actually create pretty powerful product solutions. So let's take a look today how it works. I have the sandbox, which gives an ability to do the card issuing and create card holders, do the authorization, which I talked about, and the card transaction. There are disputes and different processes. We will not talk about them, but that's maybe a good practical case how to show how the product works, or how usually the back engine or the back office is working. Usually you will do the integration if you are implementing the card issuing program or card issuing with the Stripe. Usually you have an access to this back office and your APIs are implementing certain things, which I will do through the UI. So the really first step is to create a card holder. So let me create the card holder for myself today. And that's a step which I talked before. Creating the card holder, your API is collecting certain information and storing on your end, but you're also doing an API calls to the backend. And one of the things is name printed on the card. It seems to be pretty simple and straightforward process, but sometimes it can be really hard because people have middle names, certain locations or jurisdictions, they're not so clear with the first name, middle name, last name. So even extracting this information from the documents might be hard. So in this case, I can create the card holder. I can specify a printed name on the card. Let's say it's going to be for Igor Tomych or for Igor Tomych. Usually through the process of creating the card holder, you need to specify the billing address. It will be used for matching the information while using the card. Let's say I'm from Fifth Avenue in New York. and it picks up my information. Usually this information is provided by the APIs. You are also required to specify the cardholder legal first name and legal last name. Igor Tomych, once again. Date of birth is quite important because that's one of the way how to differentiate people with the same first name, last name. Usually we suggest to collect them as your onboarding process. It's actually extra step which gives the funnel for the registration. But let's say that here we are, so it's 1st of January, let's say 180. And it's optional with the Stripe. You can do the KYC on your side, but you're able to upload the government issued photo IDs for the KYC checks. At this stage, if you did the integration, that's it. What is minimum required from the Stripe, you can approve the agreement because Stripe itself is not creating the cards. It's using Celtic bank authorized APIs. So the first step, you are creating the card holder. So here we are. There is a card holder, Igor Tomych, and I can create two types of the cards. Let's say the physical one. And in this case, there is a process of customizing your card. Usually that's a preset. If you're going full scale and have quite a lot of customers, you are not doing this ad hoc, but you can pre-set up the cards, issue different types of the cards depending on the tiers and so on and so forth. But we, let's say that we deliver the physical card. I'm selecting different parameters. So it's individual, standard shipping, and I'm creating the card. And what I talked through the presentation, if you can see, there is a card. It's not activated because it's just shipped. And what is more importantly, usually there is no balance for the card itself. So we have the customer who is Igor Tomych, and we have the shipping status. But let's say that I got the card, I logged in into the application, and I activate the card, and the card is activated, which means I can use it. But still, there is no balance. And the situation or the mode which Stripe is working is only one mode, which is self-hosted balances. It means that there is a total balance of your card issuing program, but it's split across all the customers on your merchant. Let's say I'm issuing the card for myself and someone at work, and basically with the Stripe, if there is no control or the software which we connected to the Stripe to control the authorizations and declining, all the card transactions by default can be approved, which means we will use the simultaneous balance, which is given to us. So it doesn't matter how much money I have on the card, there is a balance, issuing balance, which Stripe will use. But usually it doesn't work if I would like to provide balances to my customers specifically. That's why Stripe gives an ability to connect third-party software like a virtual ledger system on your side, do the request for the authorization, and you can decide if the particular card usage is authorized or declined depending on your balance on your side. So I can create the test authorization and I can specify the type of the transaction. Let's say online, I'm using $10. You can provide certain information for the merchant. Let's say it's transportation, rocket rides, and we're submitting this authorization. And at this particular moment, the request to API to virtual ledger system is done, and the API decides if the particular card is going to be used. This software doesn't know anything about this particular card or card issued for Igor Tomych. That's why it's declined. And there is a API where we're testing, and it's understanding what is happening. And for instance, those settings, if webhook is not working or this request didn't work well, by default in Stripe, you can put the settings that authorizing or declining all those transactions by default. And it gives really cool instrument here to overview what's going on. So we tried the authorization, it was declined. but sometimes settlement can be done, and it's called forced capture. And in certain cases that happening in card networks, in this case, you cannot say that the authorization is declined, even if the customer doesn't have the balance. And here we are capturing the settlement, which is forcing the usage of the card. And in this case, it's completed because it's forced by the network, and you should keep in mind that how authorization and transactions works. So it gives an ability to see the main flow, which I showed in transactions, authorizing and then closing the transaction, even if the authorization didn't work. So that's one of the examples. And the second one, I'm going to show you a short video how we working in production with the one of the product that we are developing at the moment. It's like a template application, but it's production. This one is the sandbox, just giving you an ability to understand. And this one we specially recorded with the template application to show part of our fintech core. So there is an application with the real card issued and the balance which is assigned to this card. And there is a third-party product online shop where you can buy certain things. And we add into the card, and we are using the card from our application for buying the Lego from the store. So we're selecting the shipping option, and we're putting the check mark on the map for the delivery. And let's wait. We're going to use the card which is issued on ourselves in our infrastructure, and we're using with the online shop. So basically, that's a testing or the usage of card issued, and at the same time, our product fintech core. So we copied the full pan, and we're going to use this card. And we put in the month and the year and CVC code, and we're going to start this transaction. And we're going to try out if it's going to buy the product, and we're clicking to process, and it takes certain time to process. In this case, there is no second factor authentication. Sometimes it can be enforced and implemented, and the order is completed, which means the production worked. And we can see the transaction is happened, and we can see certain like a debug information in this transaction as metadata, and understand that everything worked as expected. So in this case, let's go back to our presentation. And thank you for watching and attending this webinar. If you have questions, you have an ability to ask here, or you can book the meetings through the QR codes. So that's a question time. Feel free to ask. Okay, so I cannot see any questions in the chat, or feel free to ask questions if you have something. Okay, thank you. And just a little bit sneak peek. Next month, in April 27th, I will do the webinar about KYC orchestration and how you usually implement. That's another topic which is important for fintechs. Nowadays, you don't have just one vendor for checking and doing the KYC. You usually have several for cost reductions, and sometimes you need to do the AML checks depending on your region and regulatory requirements. So we're going to talk about the KYC orchestration and how you successfully reducing the money for the KYC and making sure that your business is performing well on the market. So I'm going to talk in a month about this topic, and looking forward, guys, to see you, and see you next month. Thank you for attending. It was a pleasure to see you guys today.